Want to buy a home with zero money down? You can do exactly that with a VA loan. Here's how we've helped thousands of veterans and active duty service members build insane amounts of wealth. I'm breaking down what a VA loan is, how it works, and how you can use it to become a homeowner, even if you think you can't afford it. And I promise it's probably a little easier than you think. Also, I want to show you how here at our team, Loan with Rick, we have helped veterans actually buy their properties. What is a VA loan? A VA loan is, simply put, a mortgage that's backed by the VA, and it's made exclusively for veterans, active duty service members, and eligible spouses. The biggest benefit is you get to put 0% down payment. No need to save tens of thousands of dollars just to get started. Plus, there's no private mortgage insurance, so you get to pay a lot less per month than your friends that are in a conventional or FHA loan. Oh, and the interest rates, they happen to be just a lot better than conventional loans. Also, another benefit that you might run into is if you happen to have a disability rating, you actually get your VA funding fee waived. More about that later. Lastly, if you happen to have 100% disability, in most counties, you'll actually not have to pay any property taxes, and you know how much that could probably save you. So that's just the basics, but what about eligibility? Well, if you've served 90 days during wartime or 181 days during peacetime, you'll likely qualify. Reservists and National Guards also can qualify after 6 years or 90 days during active duty. Eligible spouses of service members who have passed are also likely eligible. Here's the key. All you really need is a certificate of eligibility. If you have one, you qualify. If anything I'm going to say later in this video is just a little bit too complicated, feel free to just drop a comment and I'll respond myself. But what about credit scores, income requirements, and just planning for the future? Thankfully, the VA is really nice to our low credit score friends. There isn't really a credit minimum. I would just kind of shoot for like 620 as like the baseline. As far as income, qualifying is just overall much easier with a VA loan compared to like a conventional loan because the debt to income ratios are higher and more forgiving. Also, this VA loan has already thought ahead. When it's time to refinance and the rates drop, the VA already has this built-in program called a VA interest rate refinance reduction loan, or just VA-IRRL for short. Essentially, all you have to do is wait the 210 days from your first payment, and the rates have to drop by 0.5 percentage point, and we just float you down. Another advanced way of using your VA loan is buying a duplex or a multi-unit property and then living in one unit and renting out the other units. This is called house hacking. In fact, I have a client that just closed on a $1.2 million quadplex with 100% disability, so no property taxes, and he's living in one unit, renting out the other 3 units, and all the other 3 units are paying for his whole mortgage and then some. Oh, and to put the cherry on top, he brought nothing to closing. Only his earnest money deposit of like $10,000. So yes, this was an advanced strategy, but I'm happy to discuss some more VA home buying strategies with you in the comments. So what's the catch? Well, there's one hidden cost when it comes to VA loans that not too many people are aware of, but I'm going to show you how to minimize it. So with a VA loan, you don't have to worry about PMI or MIP, which is the FHA version, but you do have a VA one-time VA funding fee. This is typically between 1.25% and 3.3%, all depending on how much money you choose to put down at the table, or if this is your second or subsequent time buying a house. So here is the good news. You can actually roll that cost back into your loan amount. So this means you don't have to bring it as money to closing. This can keep your cash to close low. So here's an example. You're buying a $400,000 house. Yes, your loan amount can actually be above the $400,000 because you're putting your VA funding fee on top of that. Fun fact. So this is where understanding your options really matter and structuring a loan that's specific to your specific home buying needs and your financial goals. You can save thousands by having a strategy that's tailored specifically to you. All right, now that you got the basics, how do you actually get started with the VA loan? Well, first things first, I would say check your credit score. I would shoot for having a minimum credit score of like 620, 640 if you want to be like extra awesome. But if you don't know how to do this or how to get your score up, I would recommend just talking with your lender, and they can actually give you a guide on how to get to the next step. Just make sure that they only soft pull your credit score. If they don't do it. Secondly, this advice really kind of depends on the loan amount and or the purchase price, so I can't really give you a blanket statement. This is not financial advice, but typically having around $5,000 to $10,000 of cash saved up before you go to purchase your house can be a good baseline when using your VA loan. Lastly, if you haven't already, apply with a lender that knows the ins and outs of VA loans, not somebody that just does VA loans. There's a lot of VA specific guidelines that can get really confusing, and a lot of loan originators just don't know the true ins and outs. So do yourself a favor, find a lender that actually knows those and can structure a loan for you. Myself and our team over at Loan with Rick would be more than happy to help you with your VA strategy needs, so just drop a comment below. Thanks.